All right, to finish up chapter 2, we'll do some problems out of the back of the book. I've got 3 selected. The first one is problem number 28 on page 82. And on this one, we have an acquisition of Tucker Company by Marshall, and they paid 20,000 shares at a $10 par value, and then 200,000 in liabilities issued. For that, they received a book value of 120,000, which is the additional paid in the capital stock, and retained earnings of 340. And then there were 5,000 in inventory, 20,000 in land, and 30,000 in buildings that had a fair value in excess of book value. So the total fair value of net assets acquired is 115,000, which results in a gain on bargain purchase because we only paid 400 for it. So the journal entry is here, a debit to the investment in Tucker. There's the long-term liabilities that we issued, 20,000 share at $1 par value. The additional $10 value per share goes to additional paid-in capital, and then we take our gain. We paid 30,000 in professional fees for accountants and appraisers, and then we reduce the additional paid-in capital by the stock issuance cost. All right, so that's the top half of this. So what are the S and the A entries for the Sadie? Well, first, we need to calculate the book value immediately prior to the transaction was cash of $60,000. From that, we spent 30,000 in accountants and 12,000 in stock issuance. So 515 is our investment in Tucker. We had long-term liabilities of 430,000 prior to the transaction, and we issued an additional 200. We had, and both of those are negative because they're credit entries. And then we had common stock of 360. And we issued an additional 20,000. And then we had paid in capital of, common stock was 110. Common stock was 110. And this is the 360 plus 180 minus the 12. Okay. All right, so that's our initial hold on one second. So then common stock is 130. The additional paid-in capital, I've got a plus there rather than a minus. My apologies.